but he YOLO'd into Palantir. Sachin, I think you're too old to be using that term, but nonetheless, he said you only live once. And this was a term made by Drake, American hip hop rapper. He used it in the song called The Motto. I'm a huge Drake fan. Back in 2011, became a cultural phenomenon. And 10 years later, Sachin is now using the term to describe his investment philosophy, thesis, and trajectory in this one company and stock. So please tell us, first of all, are you actually all chips into the stock, and why you chose to do this?
So I'm 101% in Palantir. 101% because I'm using 1% margin.
Dude, that's straight up Dave Lee status, man. Dave Lee did some crazy thing like that, like right for Tesla. So hopefully,
your private investments are safe, though, right? You just liquidated all your public positions, right?
I have liquidated all my public positions. I'm in process of liquidating one of my private position. And once that position is liquidated, I'll have to make a call again. Is it all going in Palantir, or should I buy some of the companies I sold? I mean, there are companies I love. I mean, like Tesla, APCL. I mean, these are the companies I like. So I have to decide what to do. But at this particular moment, my public equity portfolio is 101% Palantir.
All right, floor is yours. Please explain. What's the logic behind this? Walk us through this.
Okay, so guys, first what I did is, it can be considered irresponsible. It is a very risky, and I can lose a lot of money in that. Okay, so I understand this part. Okay, the question for me is why I did it. Okay, so a lot of time I hear about, like, I have done diversified investing, I have done index investing, I have done commodities, futures, options. There are some basic questions on investing that always pondered me. Is that at the end of the day, see what we are trying to do. We are trying to grow our capital, and sometimes our conviction is high. And there was one story which always inspired me, and this is a story of two of the greatest investors of our all time. If I get it right, it was like this: that this one great investor was working in his younger years under another great investors. Okay. And he had a conviction on something which was very high. And he is so bullish that he said we should invest 100%. But he was thinking how to tell this to this investor who is great but senior to him, that I want to go 100% in. He musters the courage. He does a lot of analysis. He goes to his boss and he says like few bullet points that why he is, and he has all this thesis with him. And he says that, yeah, I'm bullish. I want to go 100%. And this senior guy told him that I'm disappointed. If you have this much conviction, you should go 200%. So the question that came to me is like, why someone at that position is it risky or is it really thoughtful? So I thought that there could be some scenarios where you really find out a situation that the risk reward is completely asymmetric. And my view is that market is so down right now, and the companies that has the ability to generate a lot of cash, no debt, has a far higher upside than downside. So I was trying to work out different models. Okay, all models are wrong. Some are useful. You can draw inference out of it. So my view was following that Palantir is almost for 60% discount to the average PS to their peers in public and private markets. Okay. Right now, they are generating 1.5 billion. The company valuation is close to 20 billion, roughly. Okay, so pretty much like they are like 13 to 15 PS. Okay, their operating margins are good. They are raking a lot of cash. Their commercial growth is good. Their government revenue can also. So I thought like even if market beat them this much, their revenue is anyway going to grow. So if it is 1.5 billion and I take 3 years down the line, it will still be like 3 billion or 4 billion kind of revenue at some point of time. And even if I apply the same valuation that we have today, okay, it should still be at least $18, $20 in that particular case. Okay. So from current scenario, like where it is today, I mean, where it is like $10, $11, I see that's pretty much to me a bear case scenario. Of course, anything can go down. My idea is that bottom for Palantir should not be less than, I mean, it should be like $4 if everything goes wrong, because that much cash they hold and that much deal values they have secured. And you can also have to assume that they have an IP which they can sell. So, I mean, the liquidating value, like, yeah, if you need to liquidate Palantir today, you should still get $8-9, in the worst case scenario. Okay. So I was running my model and I came up with this point that if in a deep decline, so there were like several checks. The checks is like whole market has to go down in that, but because it has to be, cannot be Palantir thing. It has to be a market macro that is driving. So there was a detachment factor, okay, which was like how much company's fundamental is detached with the share price. So this detachment factor for me was kind of increasing. So I had a marker on that. I had a marker on this in terms of how the company's performance and consistency in terms of go-to-market channel and strategy is actually is coming up. That was another thing. And like on top of few other things, I also had like this marker of like $10, because I had this idea like when it is 9.9, I thought everybody will be jumping and saying it is going to $5. And I said like the liquidate value for me is still like $7, $8, $9. So a lot of people would know that thing. So there is a fair chance it might bounce. So it's a calculated bet. When I was looking my other investments, I wasn't having this kind of like a Goldilocks scenarios for them. Okay, when will happen, how much that will happen. Now let me present another view. So I thought this is the case that my downside can go as much as $6-7. Okay, but it's still pretty safe because eventually it will bounce. My upside, even in the current macro and current sentiment, can now take stock to $16-18. Veronica, let's take a case that company does 4 billion and market says, yeah, it's a good company, looking good, may not be a snowflake, but let's give a PS of 30. That is $120 billion market valuation. You can assume some dilution. That is still 4x scenario from here for me.
Right.
And if companies does really good and they get all guns blazing, as I expect them to do, it could go more. So I said, okay, they are 20. They could be anywhere between 30 to 150 billion. Okay, they should not go below 10 to 12 billion. So it was an asymmetric trade. So at the end of the day, it's a market decline. So I thought, okay, how many other companies I'm seeing that kind of scenarios at this particular time? So this time I thought in terms of opportunity cost, and it seems pretty naive to do that kind of investment. Okay, but see, guys, investments, every strategy has its boundary conditions. Like I say, if you understand what risk you are taking and you can digest it, stomach it, and execute it ruthlessly. People do diversification. Bill Gates did diversification when he was the richest man. He went with Warren Buffett, where he's now. He's still rich, but definitely his wealth hasn't appreciated that well. So everything was he went into wealth preservation mode. I'm not in wealth preservation mode. I'm in wealth grow mode. Okay, that is a mode you have to accept as an investor what you are. So I can tell you, like, if what I have done, with my 20% of net wealth in this company, if a stock goes to $2, I wouldn't shed a sweat or tear on that.
You wouldn't be homeless, basically.
Yeah, I know, because what I need to do in that particular case. So it's a risk. No one knows what happens stock market, and everybody has a very different kind of appetite. I have seen the company on ground. So this is the thing. If you believe in something and you believe in your conviction, your analysis, what do you want? I want to do, like, I want to be on a bed when I'm 70, 80 and thinking I would have done it. No, man, I'm not a kind of person who keeps regret. I have changed several careers. I have changed several degrees. I'm practically semi-retired at 43. I wouldn't have done it if I didn't have the risk appetite. So I need to believe. I believe in walk the talk. If I say it's good, I present everybody analysis that this is how I think about it, and this is how my conviction is. It's all useless if I cannot act on it.
All right, let's get some thoughts on the panel. Let's do Cameron first, then Chris. Cam, what are your thoughts on that? Raw thoughts. How do you feel about the move?
I love it. Whenever I see him tweet that, probably not the smartest thing just to go off somebody's tweet, but it's like, I don't know, like he definitely convicted me. It's like I went and bought another 1,000 shares whenever he tweeted that. Just and like the charts that I've shared with you, I went and looked at that and I was like, this is bounced out of this really, really crappy down channel that we've been in. And because we've been in that since freaking like beginning of November. Like soon as earnings hit, we've just been in a falling knife pattern. It's just nonstop. We've tried to break out a few times, it just hasn't happened. But I love it. I mean, the only way I see this failing, Palantir failing, is if the United States fails, which just based on what I've seen lately with us sharing information with the Chinese for the past 3 months, may not be that far fetched right now. But I'm holding out hope that that's not a reality.
And guys, just to be clear to everyone, like my public equity is 101% Palantir, but I have private investments also. I have investments in companies like SpaceX, Klarna, Peptilogics, Atai, Solaris Bank, Mastios, Gully Network. So, I mean, I'm not 100% YOLOing with all of my wealth. I'm 100% investing.
What would you say your percentage net worth is in Palantir? Do you have any
25% of my net worth.
So I'm probably somewhere around 80, which probably not the best idea in the world. And kind of I don't know if that's what got Carp's attention when I emailed him, but I said that to him in my email. And it's like probably not the smartest thing in the world to put like almost my entire network into your company. But I believe in what you're doing, and everything that y'all do just really resonates with me, which is really hard to do.
Yeah, we'll get your thoughts on. I want you to tell the email story in a second. Chris, what are your thoughts on Sachin?
I think it's crazy. I think it's super irresponsible. I think it's the worst thing a person could possibly do. That's straight gambling. But guess what? Everyone has to understand their own risk appetite, and everyone has to do things that are based on what their logic is. Now, I've seen very few times where people have gotten this level of conviction, and fortunately, every time that's worked out. Like, I'll give you an example of someone that we all know. I don't know if you guys know Jeremy LaFed, whatever. He was at one point.
Shout out, he put me on his channel, got me like 800 subs that day. I love that guy. Yeah, go ahead.
Jeremy was working at a gas station. I think he was like a manager at a gas station. And one of the things that he saw in Tesla, he really got into it. Dave Lee did the same thing. There are once in a lifetime opportunities that sometimes just come by us, and we have to take the risk and just go in. So I'll be honest, I'm not 100% in the same camp as Sachin. I do have a diversified portfolio, but any new dollar that I'm getting, whether that be from paychecks or other investments or anything else, is going into Palantir. So it is starting to become more and more of my portfolio. Right now, it's like about 5 to 10% of my portfolio.
Makes sense.
Yeah.
But what Chris just said is very important. I mean, I'm sorry I'm interrupting you this. See, every investor is unique. Every investor is a different part of their life. Every investor has a different way to react to market red and green. So you need to figure out that what is your unique style of investing. I mean, I find people trying to become Warren Buffett, or sometimes people trying to say my investing style is Jim Chanos. Guys, you cannot invest like Warren Buffett. The kind of information he has, the kind of clout he can put on the board and see you can't do that. So don't tell you are a Warren Buffett. Okay, so that's what you need to find. Like, I invest as Sachin works. That's my style of investing. Okay, Amit invests as Amit investing. I mean, Chris invests as Chris, Cameron invests as Cameron, and we have our own flaws. We try to learn from each other, and we are saying, okay, this I can do. What Cameron does, this I cannot do. So, guys, that's how it should be.